So that's a great question, and I think what the world is seeing right now is the speculation. I mean, that's the game that's being played that I think is giving, blockchain, because everybody thinks Bitcoin is blockchain, a scary and a bad name. So, you're getting a lot of, Nasdaq, you're getting a lot of these big exchanges that are now creating digital asset and cryptocurrency regulated exchanges. So I think you'll see, in my mind, you'll start to see a lot of that, a lot of the fake stories, a lot of the hype house of cards that didn't have anything built on it start to just kind of fade away. And you'll start to see a lot of the real companies building real foundation that, is no different than a stock.
Yeah, absolutely. I think that's here to stay. There's going to be, as long as there's a legitimate coin out there, there are going to be coins that are maybe less legitimate. It's just, it's a scale. It's just like you see on stocks. You've got blue chip stocks and you've got penny stocks, and that's gonna exist as long as we ascribe value to these coins.
I think one thing that's important for people to realize is that there's a difference between cryptocurrencies, which are essentially like used for exchanging value, as an alternative to what we call fiat currency, like dollars and yen and euros, etc., and in sort of digital tokens that represent something else, right? So something that is a currency, a cryptocurrency, may have very different attributes than a digital token that represents a plot of land, or represents a share of stock, or represents 1,000 bars of gold in a safe someplace. And so it's really critically important to kind of understand how those things relate, because asking the question, are there going to be multiple cryptocurrencies in the future, is sort of like asking the question, will there be multiple currencies in the future? And I think the answer is definitely yes, and they will sort of ebb and flow, and you'll have to sort of think about what the underlying dynamics are to understand, is this something that I want to invest in? Do I want to speculate in? Do I even want to have anything to do with? Most people don't invest in currencies as an investment, right? I mean, you use currencies to buy things if you happen to be in that country, but most, investors, even institutional investors, don't make a lot of investments in currency as something to generate return. They might use it as a store of value, but not to generate return. So really important to kind of keep those things separate, I think.
I'm not sure I got a lot there. I'm going to just add a joke, actually, since we're at the Exit Club. My view on a lot of coins is it's wonderful that you can have an exit before you build your business. And a lot of these ICOs were just pure scams. So I'm really happy that groups like GIMP and others are bringing in secure token offerings and regulated securities. That being said, yeah, I think you're going to see plays by Amazon and plays by certain companies to really push their coin, and I bet they'll have some success in doing so. But I can't predict who's going to succeed doing what. But I think you will see major vendors. I mean, you might have a Ford coin or a Toyota coin or something that has some sort of value. So I think eventually that will probably wash away, and you will just have different currencies and different uses. But I do think you're going to see a bit of an arms race, different brands pushing their branded and controlled coin.
Yes, Aaron in the back.
As an entrepreneur, if I take my physical products and I convert them to tokens, digital tokens, that's the correct word, who gives the valuation of my digital token?
You. So let me just repeat or attempt to summarize your question.
Sure, yeah.
So who assesses the value of your digital asset?
Yeah, so like I sell containers, big metal boxes, right? There's so many of them in the world. Who gives the valuation of all those containers that are being now digitized into this token?
Well, the very short answer is it's basically an auction market where people value them where they're willing to spend on them. So the plan for most companies issuing some sort of utility token is that the network effect will kick in and the price of that token will increase with utilization. There may be no fundamental economics behind that other than a network effect, but that's the standard. But it's basically just the price is set by the market. There is no external valuation on that. from an investment point of view, you see a lot of what I would say very strange cap tables and some exaggerated valuations being suggested in the securities market, where people are sometimes issuing tokens where if they were just doing a standard Reg D offering, they would never get away with the valuation that they're pushing. A different question, but fundamentally it's just a market discovery process. There is no external group saying this is the actual true price, or there's no price discovery mechanism other than just what the market provides.
I would just add to that is that you have to think about what your token is a claim on, right? So if it's a claim on whatever you can buy in the network, then really the value of that token is the value of what you can buy with it in that network. So back in the 90s, during the kind of the first internet boom, American Express introduced a barter network, and it collapsed very quickly because essentially there wasn't anything that was worth buying on the network, right? So if you got these barter coins, you couldn't really do anything with them because there wasn't anything that was worth spending time on the network to try to buy. So that's kind of the risk. On the flip side, let's say that you were an entrepreneur and you wanted to get involved, let's say in raising money through a traditional type financing, either borrowing money or issuing securities. If you went through a normal process that you would go through to try to raise money from private investors or through borrowing, and then as a matter of record keeping, you decided to tokenize that and keep track of it in a blockchain, then to the extent that that record can be trusted and it tied out to your cap table and your financial accounts, and people had confidence that you weren't trying to scam them with your business because they trusted you as a business person, then that could be a very effective use of blockchain. And then if your company went up in value because you were selling more containers and earning more profits, then the value of those digital securities, that digital representation, might go up. And we're not quite there yet where there's active trading of those private securities, but we're getting there. There's something like 30 firms that are currently have applications pending with the SEC and FINRA, and T0 actually already has such an exchange, and they're just beginning to gear up. They're trading their own digital token that way. We have one that's been approved by the SEC but not by FINRA, and there's some 30 others that are kind of in the queue to essentially create those marketplaces. And so that's that on the digital security side. That's where there's some promise for being able to establish that value by connecting buyers and sellers.
Can I ask one more question? What happens if the Wi-Fi is not working? Like, what happens to your token? If I want to trade and there's no Wi-Fi connection, what happens?
It's satellite.
So is there any time that you're not on the network?
I think let me answer your previous question first,
Okay, sure.
and then I'll go to that one. So, like at Nasgo, we focus on utility tokens. So when you say the value and valuation going up and down, anytime that we tokenize any small business, we just say their token's one. There is no, do I start at 50 cents? Do I start at $1? It's one. And so it's a incentivized rewards, loyalty. It's a closed loop. This is something that you are connecting. You've got your brand asset, and you're saying, hey, for being a loyal customer, hey, when every container that you buy, I'd like to give you 50 of our container tokens. And when you get 300 tokens, it gets you, 20% off your next container. So it's a very, when you start talking speculation and things, you're starting to get into security. And this is why this is really important to understand. Michelle?
Yeah.
Michelle brought it up, like, wow, these are all utility tokens. And I said, absolutely. Like these are, we don't get into where people go, hey, how many tokens should I do? Where should I start? Where should I, it's 1 billion tokens. We just tell everybody it's 1 billion tokens. Like it has no valuation. It's just something that's just creating a currency within your ecosystem to reward, to incent, to create loyalty as a part of it. Once you start getting into, what are we going to do? Let's start looking at, we only allocated this many. Our future exit is going on to an exchange, and there's no utility to it. Then you gotta That's a world that you got to be very clear on and make sure that you're either over as security and you do everything, the right Ds and things to make sure, or you are pure utility. This is for rewards, incentives, things on your network. Then second is you were asking about Wi-Fi. So like the Nasgo network, we've got nodes all over the world. So whether it's Wi-Fi, whether it's cell phone, whatever it is, it's you're always connected. So being able to do transactions, I guess if you don't have a phone, probably can't do a transaction. But other than that, then it's available anywhere.